Welcome to Dealmaking with Laura DiFrancesco, the ultimate podcast for entrepreneurs and professionals eager to master the art of acquiring businesses. I'm Laura DiFrancesco, a seasoned M&A attorney and founder of Dean Street Law and a few other businesses. Join me as I demystify the complex world of mergers and acquisitions with in-depth insights and practical advice. Each episode is packed full of expertise, featuring discussions on the critical aspects of the acquisition process, from identifying potential opportunities to negotiating deals and successfully closing transactions. Whether you're a first-time buyer or a veteran investor, this podcast equips you with the tools and knowledge needed to navigate the mergers and acquisitions landscape with confidence. Welcome to the Dealmaking with Laura DiFrancesco podcast. I am so excited to be taking you on a journey of entrepreneurship through acquisition and mergers and acquisitions, sharing with you not only my insights as an attorney, founder of Dean Street Law. I have closed over $10 billion of transactions since founding Dean Street Law and have been an M&A attorney for over a decade. So I'm excited to not only share what I know in mergers and acquisitions and deal-making, negotiations, and business, but also have on industry experts and share what they know as well. The goal here is really to elevate your deal-making skills, your negotiation skills, and your entrepreneurship skills. Not only am I a founder of Dean Street Law, but I also have a portfolio of businesses of my own as well. I'm here at Flourish Co-working and Event Space in Westchester, Pennsylvania. And I also have Ethereal Farms, luxury Airbnbs in Southern Chester County, Pennsylvania, and a educational platform with tons of educational resources in law, business, and lifestyle design, including a course called Acquisition Insights, which has over 80 modules on the legal aspects of buying a business, taking you through all the foundational aspects of introductions to mergers and acquisitions, glossaries. We also have a bundle with templates such as battle-tested letters of intent templates, due diligence request lists, material deal terms list, and so much more. The whole course takes you all the way through a transaction, all the way to post-closing integration, much like what we're going to be doing here with the Dealmaking with Laura DiFrancesco podcast. We're going to be going through all the different aspects of a deal, everything from your search strategies from a legal perspective to who you can expect to have on your deal team, into all of the principal transaction documents and ancillary transaction documents, taking you through that transaction timeline, and also help you hear from entrepreneurs who have completed their acquisition and entrepreneurs who are growing their businesses, scaling. And we'll talk also a little bit about legal strategies for operating and growing your business as well. So I hope this is an invaluable resource for you, and I'm excited for you to tune in. Please be sure to subscribe and leave us a 5-star review if you find it valuable. We're going to get started into our first episode. We're going to be talking about what is a business acquisition and behind the scenes of what you can expect in deal making. In terms of mergers and acquisition, entrepreneurship through acquisition has become a really growing part and facet of the overall mergers and acquisitions industry. Buying and growing businesses has been something that has been a part of our economy and our industry for a very, very long time. Entrepreneurship through acquisition is really focusing on the buyer aspect of mergers and acquisitions, who that buyer is and what they're looking to do. And so if you think of entrepreneurship, there's a couple different ways to become an entrepreneur. One is to build and grow a business from the ground up. That's what I've done with Dean Street Law, Ethereal Farms, Flourish, and so much more. The other option is entrepreneurship through acquisition, buying an existing company and scaling it. So taking it from 1 to 10 instead of 0 to 1 and 1 to 10. So it's a great option, not only for entrepreneurs who are more risk adverse, but also for entrepreneurs that want to use the momentum that someone already has. This is really incredible opportunity. We have multiple trillions of dollars of businesses with our aging population that will need to transition in the next decade. So this is a really wonderful opportunity, not just for entrepreneurs and individuals as buyers, but for us as a society as a whole to really proactively and profitably and successfully transition this generation of businesses to the next stewards of our economy and stewards of our society. Not only that, but it's also a wonderful opportunity for women and minorities to really bridge that wealth gap. In entrepreneurship through acquisition, in one single opportunity, you have the change of hands of control, leadership, stewardship, the influence, as well as capital allocation. Through all of those, you can empower women and minorities to have a voice, to improve their standing in society, to bridge that wealth gap, to give them the opportunity to not only better themselves, their lives, and their economic opportunities, but have that same influence on their company, their culture, and their community. It's something I'm very passionate about. I became an entrepreneur. I became a lawyer to be an entrepreneur. And I did that because law is the fabric of business. So my hope, not only with the Dealmaking with Laura DiFrancesco podcast, Acquisition Insights, Dean Street Law, and everything that we do in sharing equitable access to information, is to support those who are looking to pursue entrepreneurship through acquisition and entrepreneurship generally with what I know to support them and help them flourish, because access to information can be one of the greatest catalysts to growth that we have. And it's something I'm very passionate about because I became a lawyer to be an entrepreneur, to have access to how to think like a lawyer and legal strategies, as that's the fabric and foundation of business. It's something that I'm very passionate about sharing with others so that I can elevate them, support them, and celebrate them in their success. So let's dive into deal making, specifically acquisition process. So if you are going through the acquisition process, here's what you can expect from the overall transaction timeline. Generally, if you're pursuing entrepreneurship through acquisition, it's probably going to be a 6 to 24 month process. It can be quite a long time. Initially, it's a big focus on the search aspect, and then you have a second component, which is the acquisition aspect, and then you have the operation and the exit. Search, acquisition, operation, and exit. That is your life cycle of entrepreneurship through acquisition. We're going to dive deeper into that search and acquisition process in later episodes. We're going to go more granular into each of these different aspects, and we're also going to be speaking about the legal aspects of operations. So with respect to your search, that's a great time to really turn inwards. A lot of people focus on externally what you're searching for. There's wonderful resources out there. I'll link a list of my favorite books in entrepreneurship through acquisition and mergers and acquisitions from the buy side. And I think there's a lot of great information out there about what to look for in a business. Generally, in entrepreneurship through acquisition, the traditional search is going to be something more of a more stable business, something with at least 5 years of profitable financials, slow and steady growth. It's going to be something in a technology supported but can't be replaced type of industry. So typically those are going to be more of your trades or B2B services, something that won't easily be replaced with AI or Amazon or big other players in industries that are consolidating and becoming more competitive with other industries. And then overall, it's going to be from there, you're looking for something that's profitable, that's going to be able to be a good foundation for you. There's tons of resources on how to evaluate business opportunities. And then there's also more expansive application of entrepreneurship through acquisition. Buying technology companies, investing in things that are more risky, more of a turnaround situation. So entrepreneurship through acquisition, there is going to be your general focus, but we're really seeing a lot more expansion beyond that for people who are more interested in taking on more risk with more opportunity and who have different flavors of life and different things that they're interested in investing their own life, funds, resources, energy, time into growing. While there's so much information about that, something that I think is really missing in this space is that internal reflection on figuring out what is actually going to make the most sense for you tactically and lifestyle design wise. Lifestyle design is something I'm very passionate about as an entrepreneur, having multiple businesses of my own. were I to be buying a business and not starting it from scratch, one of the things that I would be thinking of is, do I actually want to live and operate this business? Because it's going to be potentially the next 5 to 10 years of your life. And if it's going to impact your day-to-day, it's going to be the number one thing that you're spending time on other than life outside of work. It's probably going to be life in work. And so how do you want to spend that time? What do you want to do with your business, careers, and opportunities? And then the other thing I like to think about is, would I be okay filling every person's role on the team for a short period of time? Because ultimately, sometimes the business world, no matter how much we plan and strategize and have backup plans, things happen, and you have to be okay filling in for every role, because ultimately the buck stops with you, and you have to make sure that you would want to step in different roles. That doesn't mean that you have to, it doesn't mean that you should plan to, but you should be okay needing to do that. If you have a fulfillment that needs to be completed and it is the biggest shopping season of the year, are you going to step in and help fulfillment be completed? Because that's really going to drive whether you're successful in business or not. So those are some lifestyle design things that I think is very important to think of as an entrepreneur. It's something that I think of in every business that I start and operate. Do you realistically want to live the life of this business? Because it will be a life that you'll be living, and you want to be intentional about the life that you are creating for yourself as an entrepreneur, investor, buying a business, and what the next 5 to 10 years of your life or more are going to look like. When it comes to navigating corporate law, entrepreneurship, and managing small businesses, experience matters. Dean Street Law is a boutique corporate firm specializing in mergers and acquisitions and additional focus in real estate, commercial transactions, finance, and corporate governance. With over $10 billion in deals closed, Dean Street Law has extensive experience representing hundreds of clients in thousands of transactions, from small businesses to Fortune 500 companies. Whether you need startup guidance or advice on closing multi-million or multi-billion dollar deals, we're your trusted partner every step of the way. Visit deanstreetlaw.com to schedule a complimentary consultation. So that's your search phase. Now, from a legal perspective, there's different aspects that you should be thinking about during that stage. That is going to be in your search. Ideally, you should have a legal entity to be entering into non-disclosure agreements. Non-disclosure agreements are going to be something that your seller is going to provide that you must sign to have access to confidential information. This is standard as long as the terms are equitable and fair, and you can share that confidential information with your advisors, such as your legal team here at Dean Street Law, then that's okay. But in entering into non-disclosure agreements, entering into letters of intent, indications of interest, those are all things that are very, very important to have a separate legal entity, because that separate legal entity will protect you from personal liability. So a separate legal entity creates a corporate veil, and if you operate that business correctly, you can avoid piercing the corporate veil, and so you will protect yourself and your personal assets, your bank account, your car, your real estate investments, your home, all from any potential liability that's involved in deal making. And there is a high potential for liability in deal making, especially when you have access to confidential information. So this is really important to have a separate legal entity set up. It is something that I highly recommend. You can find legal guides on deanstreetlaw.com. We will link it in the show notes on different legal entities that you can select from, pros and cons of each, how to avoid piercing the corporate veil. And we also have, if you're setting up a single member LLC, we have the startup bundle, which goes through how to do it and provides you with the legal documentation necessary to start a single member LLC. And if you have multiple owners, so a multi-member limited liability company or a partnership or something like that, if you have multiple people who you're starting this venture with, I highly, highly recommend that you engage a lawyer to draft your documents. You're going to be putting a lot of money into this venture, and you're going to have expectations between each party. Your documentation and your organizational documents are essentially like your prenuptial agreement for your business. And so in order to have smooth sailing in operations and exit opportunities, it's important to have that properly documented. So that's going to be what you're going to be facing early on in your search phase. The next item, as we discussed, is your non-disclosure agreements. Those are typical, but they're also generally one-sided. So on the Acquisition Insights course plus templates, we have buyer-friendly and mutual non-disclosure agreements, so that as you're buying the business, you're going to be providing confidential information as well. So when you're thinking about non-disclosure agreements, you need to think not only, is it going to allow me to disclose this information to advisors that I need to? And is it also going to protect the information that I need to disclose in order to buy this business? You may be providing your financial information, showing proof of funds, anything else that's private and confidential to you. And you want to make sure that that information is protected as well. Then the next item of legal documents that will generally come up in the search phase is you're going to be potentially submitting an indication of interest. So generally, the first legal document that most people enter into with a buyer and a seller is going to be your letter of intent. But sometimes there's an indication of interest that comes before that. An indication of interest is truly non-binding. It's an indication of interest in pursuing a transaction together. It's going to have a few material deal terms in it. We do have a template indication of interest in Acquisition Insights, the course and the bundle of templates. And those material deal terms are generally going to be a general range or prospective purchase price, and generally how that's going to be broken down, whether there will be a seller note, real estate involved, and whether the seller will be transitioning and what the terms of that, if there's going to be an escrow, holdback, or if there's going to be a deposit paid or anything like that. Essentially, your biggest material deal terms, structure, whether it's going to be an asset purchase or a stock purchase, those are generally going to be set forth in your indication of interest. Think maybe a 2-page document, really short and sweet material deal terms. Essentially, it's going to generally be something that sellers represented by both brokers may request or you may intend to submit to gather additional confidential information before submitting a letter of intent. So it can be a great way to show good faith interest in pursuing the business acquisition. The next is going to be your letter of intent. This is going to be your first material agreement between the parties. This is often underestimated and overlooked. A lot of people use online templates that they just pull offline. They don't really know whether it's good, whether it's not good, and it can really create an opportunity for failure in the acquisition process. It can be one of the most indicative moments of whether the deal will succeed or fail. A bad letter of intent is not going to protect you. It's not going to support you as you're investing thousands of dollars in due diligence and pursuing the acquisition. If you have a good letter of intent, it will protect you. It will set forth the material terms. It will be the legal foundation of the entire transaction that the purchase agreement and all of the ancillary transaction documents are based off of. I have some great upcoming episodes where we're going to dive deeper into the letter of intent specifically. I also have a letter of intent masterclass and checklist that you can sign up for free, which I will link in the show notes. So I'll let those go over letters of intent in more detail, how to negotiate them, that checklist. If you're going to use a template, we of course have our battle tested templates in the Acquisition Insights course and templates bundle. But if you're going to use another template, at least at a minimum, look over our checklist, see does that letter of intent have everything that you need in it to properly document the intent of the parties and protect you during this really important phase of the transaction to not only maximize your opportunity, minimize your risk, and also minimize the likelihood of broken deal costs in your deal. Foundational, fundamental, and so important. Once you have an LOI signed, you do want to be talking to your lawyer before you have an LOI signed. If we do provide a flat fee service to negotiate and the letter of intent through Dean Street Law. We're always happy to talk to folks before the letter of intent stage, price it out, share with them what our cost of services would be throughout the entire transaction. And we're also there to support if it's not something that you feel comfortable with negotiating the letter of intent, we're happy to do so. With respect to engagement of legal counsel, you do want that ideally to know who your legal counsel is. It's going to take some time to interview different legal counsel. We do encourage you to do that. That's really important to make sure that your deal team is going to support you and be the right fit for what you need in your transaction. So taking that time to interview folks, it is going to take some time to get on their schedule, to have conversations with them, to determine who you want to work with. Do that before you sign your letter of intent, because once you sign your letter of intent, that exclusivity period is going to start winding down, and you don't want to be wasting that time period scrounging for figuring out who your deal team is going to be. That's going to be rushed. It's going to potentially create issues for you in engaging the right legal counsel for you. So have those conversations before you submit your LOI, so you know who you're going to be working with post LOI. And if you don't have them negotiate your LOI, they should be in place on day one of your exclusivity period, so that you can maximize the value of utilizing your attorney, and also so that they can properly guide you through that whole process. We set our clients up for success on day one after signing a letter of intent. We send them a material deal terms list, a closing checklist and timeline, and a due diligence request list. And then we set up weekly meetings thereafter so that we can be very proactive in our deal making strategy. That is one of the things that really underpins the value that we provide as advisors, and it also sets you up for success in your deal making process. You don't want to be working with advisors who wait until the last minute to start drafting. That's going to be a rush. Things might be missed, forgotten, and overall it's going to be a really stressful, hectic experience for you. In order for this to be as smooth as possible and as successful as possible, I recommend getting your legal counsel engaged at the beginning so that they can guide you through that entire process. Thinking about buying a business? Unlock the secrets of successful acquisitions with Acquisition Insights, your legal roadmap for success. With over 81 modules of video lectures, written materials, guides, and checklists, we provide in-depth guidance to navigate every step of the process. From initial interest to closing the deal, get the expertise you need to make informed decisions. You can also access our battle-tested templates in the Acquisition Insights course and templates bundle, including letters of intent, pre-LOI and post-LOI due diligence request lists, material deal terms lists, and more. Visit lauradifrancesco.co/the-shop today and take the first step towards buying your dream business. So let's talk about immediately after that LOI. That's what we send to our clients. Obviously, it's going to be different from attorney to attorney, but that's how we set our clients up for success. Then generally, you're going to, depending on the amount of time that you have in your transaction timeline, you're going to generally stage due diligence. You're generally going to do that for cost saving purposes so that you're not investing too much in a deal that may not move forward. The number one thing to make a deal not move forward is going to be the financial due diligence. Generally, you're going to do business and financial due diligence immediately. During that time, we have already provided the buyer and the seller the due diligence request list. We do also have a pre-LOI due diligence request list in Acquisition Insights templates and bundle that we do recommend initial pre-LOI due diligence that you do, both from the legal and business side of things. And then once you're under LOI, you have your post-LOI due diligence request list that we provide. So while you're doing business and financial due diligence, they can be populating the data room. This does take time, especially for less organized sellers. So they can be populating the data room with information necessary for the legal review and also answering all the questions that we have. Our due diligence request list is comprehensive. It's at least 13 or 14 pages. We customize it from deal to deal to make sure that it addresses the likely issues of that might come up in different industries and everything. So while you're doing, usually in the first couple weeks, I would say the first 1 to 3 weeks, maybe 4 weeks are going to be business and financial due diligence while they're populating, that was Molly snoring, while they're populating the data room. Then once you're ready, you feel sufficient confidence in the financial due diligence, then you're going to have your legal team start the legal due diligence. Generally, you want that due diligence period to only be the first 30% of your entire exclusivity period. So plan your exclusivity period according, and your due diligence, and bringing in different advisors according to that, because if you use too much of your exclusivity period for due diligence, you won't actually have time within that period to document the deal, negotiate the deal, and do everything else, which is super, super important. So after we do legal due diligence, we provide a report to our clients. We go through all of the material issues. All of that due diligence is going to inform the terms of the principal and ancillary transaction documents. So depending on whether you have a stock or an asset purchase, and one of our upcoming episodes is whether it should be an asset or a stock purchase and how to evaluate that. Depending on which type of deal will drive the documentation necessary to document that transaction. And we have a blog post that we'll link in the show notes as well, with all of the material transaction documents that you'll generally see in a deal. So this is going to be your purchase agreement or merger agreement, a stock purchase agreement, asset purchase agreement, or merger agreement. And that's going to comprehensively cover the deal in terms of the expectations of the party, what the business will be delivered, that it is what the buyer thinks it is. It's going to provide indemnifications where the seller indemnifies, protects, defends the buyer against liabilities that may occur on the seller's watch, and the buyer indemnifies, defends, and protects the seller from liabilities that may occur on the buyer's watch. And this is all very negotiated. It's going to set forth your closing conditions, all of the things necessary for closing to occur, and your closing deliverables, what needs to be delivered in closing. So it's very logistical. It's a bigger transaction document. It depends on the deal size. It's generally going to include your working capital adjustment. It may include information if you have holdback escrows, indemnification holdback escrows, or if you have set off or clawback rights. All of these things are going to be brought into your purchase agreement. Of course, the purchase price, how that's going to be delivered, everything like that. If there's going to be any adjustments to that, any earnouts. So really comprehensive. Expect something at least 30 pages, but on bigger deals, it may be considerably more. Think 60, 80 pages, really depends. We specialize in sub $100 million deals, and that's the majority of what we do is going to be, majority of what we do is in the I would say $2 to $25 million range, but we do considerably larger deals as well, both sub 100 million and occasionally above. So we're happy to support you through that entire process. It is vastly different depending on what your target company is, the deal structure and deal terms of what exactly you'll need in terms of transaction documents. But at a minimum, expect generally a non-competition, non-solicitation agreement, a employment or transition or consulting agreement with the seller, something to transfer that knowledge post-closing, as well as a seller note is pretty common these days with interest rates in the current climate that it is. And then you'll also have, depending on the deal structure and terms, a number of other transaction documents. So in an asset purchase, every asset is transferred, every asset class is transferred legally via different transaction documents. So with respect to a bill of sale, that will transfer personal property, a deed will transfer real property legally owned by the seller, a lease will transfer real property occupied and used by the seller. You'll also have an assignment and assumption of contracts or licenses or permits or intellectual property. So all of those will transfer different types of asset classes. And there can be so much more beyond that to really cover all the bases necessary. If you have an escrow indemnification holdback, you'll need an escrow agreement. If you have a deposit, you'll need an escrow agreement. So there can be tons of different supplementary ancillary documents. You will also always need consents to approve the transaction, both from the parties and any third parties necessary, and certificates to attest that the representations and warranties in the transaction documents are not just signed by an entity, but also upheld by an individual. and certified by an individual. So you'll need those consents, certifications. There's generally officer certificates and secretary certificates. And they're also going to attest to the organizational documents, organizational structure, ownership, etc. Big material, important things to effectively, legally transfer the business. And then once you have drafted and negotiated all of your transaction documents, we do all of that through Dean Street Law for our clients. It'll be negotiation time. And one of the biggest mistakes that I see people make is they forget to include time in their transaction timeline for the seller to respond to those transaction documents. It depends on who the seller has that they're working with, whether they have already engaged legal counsel. I've seen sellers not engage legal counsel until we were actually supposed to close. And so then it took another 3 weeks for legal counsel to review everything that we drafted and thought was agreed upon to sign off on that and for us to actually close. So you want to make sure that the seller early on has engaged legal counsel, and you also want to make sure that they are communicating with legal counsel and you what the expectation is for receipt of those transaction documents back. And that can be really helpful too if you want to include that in your letter of intent, that they will respond within a certain amount of days. That can help things move. Generally, use your letter of intent negotiations to inform you of general response times for your transaction documents. If it took a month or two for the seller to respond to a letter of intent, it's probably going to take a similar amount of time. It's not uncommon for a seller to take a month to respond to a purchase agreement. Ideally, we want them to respond within 2 weeks, but sometimes it takes longer if they're less organized, if they're less comfortable with the process, if their lawyer is tied up on other things. So do make sure that you're communicating around expectations of timelines for response times for everything so that you're setting yourself and the seller up for a successful transaction process. So as you're negotiating all those things, we're updating the closing checklist to make sure that we know exactly what's necessary to get to closing, that we're tracking everything. We're like your quarterback. There's a lot of project management involved because there's a lot of deliverables. Most deals take at least 10 to 15 transaction documents, and I would say generally at least 20 to 30 closing deliverables to get a deal done. And so we're tracking all of that, updating the closing checklist, tracking down everything necessary to get to closing. And then you have to think about your prep for closing. Closing just doesn't occur when you want it to occur. There's a lot that has to be done. All the documents have to be finalized. We have to make sure that everything's been negotiated, that there's no single blank left in the document. Everything has to be dated. Usually that impacts other terms and deliverables and other dates throughout the documents. So expect it to take at least half a day to finalize all the transaction documents for closing. So I generally like to schedule closing between a Tuesday to a Thursday. I think that sets people up for success. And I like to schedule them between 11 a.m. to 2 p.m. because you want it to be scheduled late enough so that any last minute things that need to be done before closing, that could be closing out the books, that could be gathering all the final numbers or anything like that, finalizing reports, that can be done the morning of, analyzing transaction documents. If something slipped, if the closing slipped to another day, all the transaction documents have to be refinalized. So it's good to have a buffer in the morning to be able to do all of that work, hand over those deliverables, have a smooth closing. And you do want to schedule it before 2 p.m. because generally the bank cutoff time is anywhere between 4 to 5 p.m. And you want to make sure that you are able to schedule closing with enough buffer time so that if something happens, you're waiting on something last minute, that you still have time to send wires, even if something has been delayed by a couple of hours. So you do want to have a buffer for when wires close. Talk to your banks about when wires close. And then generally there is a time post-closing that deliverables are still being sent. So if it's an asset purchase, the seller probably needs to file something to change the name of the business, or they might need to close down the business because they'll no longer be using it. So we need to make sure that those closing deliverables are provided from the seller to the buyer, or maybe there's something from the buyer to the seller that was pushed post-closing because it wasn't important enough to hold up closing, but needs to be done nonetheless. And then you're going to have your integration period. And when you're having your attorney probably fix the things that we found out about during your pre-closing due diligence, and this may be contracts that need to be improved or making sure that you're addressing critical legal components as soon as possible so that you continue your business successfully, and it can really optimize your opportunity for growth and scaling that business for that great exit. So overall, that's an overview of the entire transaction process. I'm excited to share with you, we do have a resource on the transaction timeline. It's in our guides on deanstreetlaw.com. Be sure to leave us a 5-star review if you found this helpful, and I would love feedback of what you'd like to hear next on our upcoming episodes. We're going to be chatting more about letters of intent, deal structure, asset purchase versus stock purchase. And of course, we have tons of resources for you with acquisition insights, over 80 modules with video lessons, written materials, guides, and checklists to support you in your deal making process, as well as our battle-tested templates in the acquisition insights course and templates bundle. In addition to that, we also provide consulting services while you're in your search phase so that you have economical access to legal information. And please feel free to share this on social media. I would love it if you could tag me at Laura DiFrancesco on Search Funder, at Laura DiFrancesco on LinkedIn, and at Laura M. DiFrancesco on Instagram. I think it's L. DiFrancesco on Twitter, but we'll be sure to tag it in the show notes. Please tag me, please share it with friends if you think that this is a positive experience and supportive for your deal making process. I'm really excited to continue the Deal Making with Laura DiFrancesco podcast, and I will see you in the next episode. Thank you for joining us on this episode of Deal Making with Laura DiFrancesco. I hope you found today's discussion insightful and that it brought you one step closer to mastering the art of mergers and acquisitions. If you enjoyed this episode, please make sure to follow and subscribe to Deal Making with Laura DiFrancesco on your favorite podcast platform so you never miss an episode. And if you found value in our discussion, please make sure to leave a 5-star review and share the podcast with anyone who may benefit from it. Sharing our podcast is the best way to show your support and help us to continue making more content just like this. So please be sure to take a screenshot and tag us on social media whenever you can. For more in-depth resources, be sure to visit our website at deanstreetlaw.com, where you can find articles, guides, and more information on our services. Or you can also visit lauradifrancesco.co/the-shop for more information on our legal courses. Don't forget to follow us and connect with us on social media for the latest updates, tips, and exclusive content. You can find us on LinkedIn, Search Funder, at LM DiFrancesco on X, and at Dean Street Law on Instagram. Be sure to join us on our next episode where we'll be discussing more deal-making tips and insights. I'll see you there.